very good morning to everyone. Welcome back from the weekend and, of course, the Monday as well. It's been a very volatile morning in the markets, and we're once again joining into a market snapshot to break down the high market movers and where the opportunities would definitely seem to be in the market. So, of course, as we give in a minute or two for a few of our peers to join in, uh, don't forget to take the time to create your FXPesa account with the link in bio, in the description of this video. And don't forget to sign up for the various resources that FXPesa does offer. With the link, you're able to see the various materials and classes offered, most importantly as well, regardless of what level of trading you're on, a beginner, an intermediate, or even an advanced traders. And as well, the Caribou bonus is still available on your first deposit as well. So don't forget to take advantage of those are few many those, how do I call them, advantages that are being offered to you as well. So in about a minute or two, as our peers join us, you can as well go ahead and do that. And then we are going to go through some of the few economic activities that we do expect to cause some bit of volatility in the markets today, and also break down some pairs and see where the opportunities may definitely lie from the technical perspective as well. I'd also like to remind you that now the US government shutdown has gone into 14 days as well. So yeah, that's one of the reasons why that's causing a lot of volatility in the markets at the moment, and we still don't know how far it's going to go, how long it will take. But remember that some major sectors will not be open to some news events, will not be coming out within this period of time. And as we did say at the beginning of the month, we didn't have the non-farm payrolls, and yeah, if the government remains shut down as well, we may most likely still see non-farm payrolls next week as they had been scheduled, because last time they put them tentatively. They're scheduled for 23rd, but if the government shutdown continues, we are most definitely not going to see them again next week. Of course, if it goes into the other month, it will still be the same as well. So looking into economic activities over here, we can be able to see. So looking into this calendar, don't forget you can access this simplified calendar on your FXPesa or equity account. You just come into your portal, come down to analysis. You have this drop down, you come to market calendar. Then you can always be able to filter it. Then you can as well be able to filter it from up over here. Just a second. You can come above here and then do the filter. You can filter low, medium, or high impact news events as well. So I'll filter to medium and high impact. Then I can have everything going on as well, or I can have it in this simplified format as well. So I've chosen the Fed Chairman Paul's speech. This will be at 7:20. It will be very, very important as well. It will be high impact. We have Bowman speaking. Then you have a Bank of England as well. Taylor will be speaking. So we have, these are some of the events you want to look out for, but the high impact will basically be this coming in at 7:20, and then this coming in at 8 p.m. later in the day. Then here, of course, there's a small inside Jerome Powell took office. Remember basically who Jerome Powell is and what he's going to be speaking about as well. Then the assets that you would want to watch out for within that period of time. This will relatively be towards the London close, after the London close. So we should look at the USD JPY, Euro USD, AUD USD, GBP USD, USD CHF. So you have all these assets that this particular event actually affects, right? So you can always choose any event here, and they'll also give you which currency pairs to look out for opportunities within. So you can always be able to feel free to take up advantages. So just a second. So sorry about just talking about the pairs and the ideas. So usually there are trade ideas given in the signal center. You can also find them here. That's in case you're looking into that. So moving away from this, we can be able to look out our Forex Factory and just compare the calendars and see if there is anything else we would want to watch out for within today's news events. I usually keep the medium and high impact news. So you still have the same news event 7:20 Jerome Powell's speech, and then the Bank of England governor Bailey will be speaking at 8 p.m. So coming into some other major movers, we can see a major headline out here for guys who are into the London session. European stocks lower, and you want to just find out see if there is anything important here or anything that may affect us directly in the currency markets. Or for some of you that trade the Euro Stocks index, so Euro Stocks are retreated on Tuesday with the stocks 50 down 1% and stocks 600 off 0.8%, giving back some of the previous session's strong gains. Losses were led by basic resources, autos, banks, and industrials. Renewed concerns over the US-China trade disputes weighed on sentiment as both countries started charging new port fees on each other's ships today, right? Corporate updates also drove market movers. BP slipped about 2% after warning about $500 million in post-tax impaired charges. So I think the main thing we can take out of this is the renewal of the US-China trade dispute. As we all know that they reopened the doors for the negotiation yesterday, and of course, Scott Bessent is most likely going to be the one to lead those negotiations. And as you all know, these always tend to cause a bit of volatility in the markets. Not a bit, a lot of volatility in the market. So you might want to watch out on that for especially power trading indices and gold as well. That's what you're going to be, I think that's a major thing we're going to look at, particularly from this side. There's no other major news coming out, especially probably because of the government shutdown. In geopolitical side, you can probably look at the Israel-Gaza war, but then the peace still has no major impact on the market on the markets generally. They have no major impact on the markets that we tend to trade, or as retail traders, we can't focus much on that. The China-US conflict would be the biggest thing in focus. So with that in mind, we can now just drop on the technical side and see what the market has to offer. We did have that kind of gain on the US dollar today morning, so you can go ahead and just try to see what the technical perspective is looking like as of today morning. So let me just share my screen on that side for a bit. So this is silver. Silver did set new record highs. She has been doing this for quite a time. I think we have been following silver for quite a long time, for a few months, ever since I think May when it began this bull run. We have been on tenterhooks with it, occasionally coming into it to break down a different analysis through it. So let's look for the dollar index. Let's look for the dollar index. All right, so we can start this from the 4 hour. I'll do the dollar index from the 4 hour. So we did see the dollar index give us some slide into today's market open, but then later on it gave us that big gain going back to the upside. Now, as you can see in the previous price action on the 4 hour, we have been seeing this nice dollar recovery even amid the federal government shutdown. Last week we did have 10 speeches from the Fed governors, and what they are doing is forward guidance. I believe I did speak about this last week. The forward guidance they are doing is to keep on boosting the investors to continue investing in the dollar bonds or the US bonds, and this the effect that tends to come out even in bad times or uncertain times. They tend to do what they call forward guidance to just keep boosting the investors energy to keep investing in the currency as well. So we are seeing SoFi is doing a very good job. They had 10 speeches last week. This week we are going to have relatively almost 10. I think there will be about 8. And you can see they already have about 2 of them coming in. Bowman and Jerome Powell will be speaking, all in the same regards to do forward guidance. So as we had seen last week, price did come and give us the structural break to the upside, and then came back and tried to respect that level there. And the aim is, of course, for it to come and take out these highs, and probably the forward guidance that they are doing as the central bank should continue giving us some bit of gold recoveries, unless otherwise. I think besides that, the only thing that may change the perspective of this would be that China-US trade conflicts. But other than that, the Fed is doing so with the forward guidance. And of course, they are on set to do another rate cut that we probably hope will continue as well if they will do the rate cut. But I don't know if it will be the same with a government shutdown. But the Federal Reserve Bank is independent and it's not a federal agency, so it doesn't get shut down. It's the Ministry of Labor Statistics that gets shut down. That gives us the non-farm payrolls data as well, or the employment data. So yeah, our aim is to see a breakout to the upside and probably continue this trend to the upside. Probably the dollar recovery can be set to continue. Looking at lower time frames, we do see that price not only went to the upside but tended to give us two structural breaks. We do have this structural break around here, which was a nice shift pattern, and price had taken out this liquidity. Someone would want to say they're taking out this trend line liquidity as well. Depends on what strategy you would be using. But then in this, the fact that price took out these left hand side lows, then came and took out the high around here and the high above that, this whole low becomes a strong low. So in case you anticipate some kind of a correction move, I'm looking at two areas where the correction might end because of the momentum that we have to the upside. Let me mark this with a box tool. This would tend to be my area of interest that I'd want to watch out for. This area here as my first area of interest. Then my extreme area of interest for looking for buy possibilities will be this demand level at the bottom, or the extreme demand level. So these are areas of interest I'd want to watch out for, meaning when price gets to them, I can tend to look for some bit of lower time frame confirmations, preferably a 3 or a 5 minute time frame. A confirmation would do me best within these zones here, either of the zones, to look for those buying opportunities that can probably go and take out those highs on gold. So alternatively, we can say there's an intermediate demand level here. It's not one where I would love to look for opportunities personally. I don't feel like it's in the right zones for me to look for that. But then you can always watch for guys who are into scalping and probably look for the third idea of buying opportunities if price tends to use that demand level to break above this high. Meaning from that perspective, you'll want to look for a break above this. Then probably that nice retracement to continue the push to the upside. So this will be the conditional bias you would have in case price decides to continue from there. It's not always a must that price will either retrace to the discount levels or to the extreme levels. It can pick up momentum from there as well. But then you'll want to see a nice structure come into that place, closure above this high, nice retracement, and then price can definitely continue to the upside. Then of course, when you come into this area, you can be able to refine these demand levels here. The first one we had seen was this. That was like a hidden formation. There were those two bullish candlesticks with 2 long wicks. Then here we can definitely tend to refine. We've all the way to this that looks like a doji candlestick almost. It's you can see it's a neutral candlestick or an indecision candle, but that would also be nice. So these will be the two buying areas of interest. Then this will be the conditional bias. So these areas, of course, only work with confirmation. It's when I believe they make more sense as well. So I tend to use areas of interest just to pick up confirmations and be able to push a price to a desired direction. So it's a dollar index bias. So off the dollar index, we can now be able to dive into a few dollar pairs and see if we can be able to align the analysis, or see where we can be able to pick up some good kind of opportunities where you can be able to capitalize through the day's price action. And I would like to remind you that this is not financial advice. So kindly please do your due diligence when you're going to take trading ideas in the market. So you can look at this. This is Euro USD. Euro USD. So with Euro USD, I have some marking that I had had from my previous analysis around, and I still believe they are turning to hold price. As you can see, the dollar is getting some strength as well. So this was what I was looking at. Price had broken to the downside in this regards. This was just showing the direction that price is going to the downside, which is quite okay. So price had given us this break to the downside, gave us that nice retracement into this supply level over here that it then respected. So the idea was to have this supply level come and break these lows here. As you can see, price hasn't yet quite gotten to close them. Price did test them a little bit. We have this test on that low over there. The goal would be for price to close below it and then push to the upside. But what you can do is go to a 30-minute time frame and see if there are any conditions that price can probably want to come up and pick some liquidity, then later on push to the downside. So regardless, it will be the high point that we have within this price action. So as they break out from a 4-hour to the downside, you can get rid of it. Then so the supply zone price I initially used as well. So as you can see here, when you're marking the areas available to the upside, usually the idea would be having price. If price is going to go bearish, you want it to pick some liquidity and go lower, right? So here I would have the extreme level. This would be our extreme supply level or our extreme area of interest you'd want to watch out for as well. Then now this would be the other area you're going to watch out for as well. So let's have this over here. We can have the supply level. So this will just be the same high as well. Then last but not least, we can say that price did give us a breakout from here, and we tend to expect some kind of retracements for price to give us. So when you look at the retracements, we have this level before this high that price can go to, but then we have this hidden area here. Now these areas usually are going to be available to you on lower time frames. When you look at these kinds of price action areas, especially when it comes to intraday trading. You can always go down to lower time frames to try and get what areas are significant within that zone. So when I come lower, I'm able to refine this area here to this supply level here. I'm able to refine it to that. When I come to this particular area here, I'm able to refine it all the way. Let me see. With this, I'll just refine it to this area here, to this whole zone as it is. Usually with Euro USD, it's a low pip value pair. So in the low pip value pair, you always expect you don't need to refine a lot because the risk will always be a bit low. Here you have about 8.5 pips in terms of the area of interest. But remember, the idea of the area of interest is to pick up confirmations before you take any trade idea. So it's always helpful if you have a nice confirmation coming inside one of these zones here to give you those bearish moves. So here you'd have looked for buys, a break above these zones would give you some buys. But usually this range is like 21 pips. I don't feel like it's worth it in most cases. So usually it's always important also to trade what they call free ranges. Free ranges basically means that when you look, if one price to come, let's say from point A, and this are point A to point B, right? I'm going to look at the space in between or the number of pips in between point A and point B. So if they're like 20 pips, the idea is that with confirmations or because or of market volatility, you're probably going to catch like how many pips, like 10 pips, 50% of that range. So it's something I tend to look out for when I'm looking for opportunities. I want to have at least a 40 pip range upwards. That makes sense because you can easily catch about 20 pips. And with proper risk management, proper confirmations, or some kind of nice refinement, you're able to capitalize. When you look at the pip range between this about 25, but you expect the pair to go lower, as we had seen in the 4-hour time frame. Price could possibly go lower than that. It has a long free range, literally to the downside. No very recent price action. What you have is far back, a couple of months back. So that can be a nice good range. You can't fail to capitalize about 20 pips upon confirmation and nice refinements. So that's the outlook going on Euro USD. So when this is showing or giving us signs of being bearish, that basically means that even the dollar index, as we saw first, is giving us bullish signals. So the correlation there is actually a bit that direct. Looking at the structure we have right now, if you get conditional bias, that means your price can actually turn without getting to your area of interest. We have this nearest lows. The idea would see price break below this low, give us a nice retracement or correction move, and then push lower to the downside or the desired direction. So this is the way you can always look at this. 3 biases. We have these areas of interest, the most recent area of interest, and then the extreme area of interest. Then you have the conditional bias. In case price doesn't quite get to the area of interest, what next? Do you give up on that pair, or do you look for a different approach to look for those entries? So it's something you can always look into or to incorporate in your trading or day-to-day activities as well. Okay. So this is Euro USD. So let's move into JPUSD and see what it looks like. So JPUSD, you can see that bearishness did come in handy, and you can look at this on the 4-hour time frame. Price to give us this break to the downside off of this. You realize what a supply level responsible for that breakout to the downside, and this was a supply level. And price did use now similar to one before. Would want price to come in and take out or close below this area here, right? So once price closes below this area, you can expect that nice correction move to the upside. Then later you can look for some kind of bearish or that pull to continue the movement to the downside, continue forming lower lows and lower highs. As you have seen, it has been that trend in the past few days on this pair as well. So you can see that the past few days it has been actually paying so much attention to that kind of price action as well, that bearish momentum or that bearish strength in the markets, right? All right, so this is a JPUSD, pretty much similar to Euro USD, just slightly different structures, but the bias does not quite change. All right, so let's move into our JPY. Okay, the structure in JPY hasn't been the best of late, especially on higher time frames. So like what we are seeing, someone just break this one down quickly. As you can see, price did have these strong levels here. These were like a strong highs. Price had difficulty breaking them. At this point here, it comes down to peak liquidity of a hidden demand level in this time frame. This was around, I think that was the demand level it used, right? This one anchored with. So you can see this on lower time frames. This is where price anchored from to come and give us this break of structure. But because of a strong resistance and you have a gap up, we can always see that price can want to look to come in and fill the gap up. So if we were to aim for the gap up and want price to push down low, what would we expect to see? So we can see from here, price gave us some kind of correction that broke to the downside, giving us a low time frame breakout as well. So here you can expect some correction moves. I wouldn't think price is going to quite go all the way to the extreme supply zone areas this side, but when you look at the breakout zone itself, they tend to hold a lot of momentum as well. So I feel like price will come back to this resistance here and then continue to the downside. And even the resistance zone, not a level, it's a zone. In my in my regards, it's a zone, not a not our area, not a level in terms of resistance. That means price can still get into it and give us probably like a 5 minute a confirmation to the downside. It's a break above that. I'd prefer you wait for a break above this high as well. Then you can look to continue the bulls to the upside. So in case price breaks above that, then you can think that price coming to take out this I think they call it buy side liquidity, the ICT guys, or that trend line liquidity out there, right? Price can want to come and take it out and continue that bullish move to the upside. We did see the JPY or the Japanese yen lose a bit of strength early last week when they announced their new prime minister, a dovish prime minister, and we did see that kind of big push to the upside. This breakout was when they had just announced their new prime minister, and price pushed all the way to that side as well. So that was in regards to the new prime minister. But right now we are seeing that strong correction move, and price tends to come to fill in these big gaps or imbalances that's always caused by very large volatility. It's going into lower time frames and just trying to play the momentum. As we had said, we are looking for that push to around those levels and see if we can continue to the downside. A break above that will mean price is targeting these highs. So a closure above that area there, candlestick closure above these highs. Just now start repositioning yourself to see if price can definitely come in and target these highs and probably flip to the bull side and continue the bulls that we have had since last week. And that's something you can want to look out for as well. So you can look at one more USD currency pair particularly and see how this so yeah, you can start when the dollar is gaining, the USD CAD also continuously keeps gaining as well. And yesterday was a very bullish day. Today is also looking promising in terms of having the bearish momentum, the bullish momentum, sorry, in as well. Looking at this, you can see the 4-hour price did come and give us a breakout, showing you the intentions to continue higher order strength available on the USD CAD. Going on to our 1-hour time frame, we can have some kind of a correction is trying to come into play. Then the areas could be targeting to continue the bull moves of the 1 hour. Could definitely be, we have this demand level over here, we have the one below this as well. So I prefer this into this one over here. So once the price come back into this area and probably give us a low time frame confirmation, could be a 3 or a 5 minutes confirmation. Any of them could do based on what your confirmation criteria actually are. You just try to make sure they have all been ticked or filled in regards to the bullish sentiment within this area. Another thing that could probably make this area fail is if price comes with little or no retracements, right? So then that retracement is called high volatility retracement. And usually with that a kind of correction, price rarely gives you confirmations, because when you just come and go through your whole demand supply zone or even order block or even FVG, it will just come and go right through it without giving you any sort of confirmations. So this is our USD CAD. We can now move on and just put the currencies in terms of the dollar side. Then we can look at preferably gold. So gold has been very bullish. We did see new all-time highs come into play yesterday as well on a move that was sponsored by Friday's price action. Of course, the guys on BTC didn't have the same fortune as the poor on gold. BTC did see a crash up 15% in less than 4 hours on Friday. But then coming to gold, we can see that price has been giving us this push, give us a break of this resistance or the red line over there. And now from there, you can look to see if there are any conditions for it to either give us a retracement or continue giving us a correction. Coming down to the lower time frames, looking at the 30 and the 1 hour time frame, they have given us some breaks to the downside. but preferably price was basically coming to a demand level to pick up enough liquidity. So when price didn't have enough liquidity around these zones, it could tend to sweep through them or to violate them like this, and you always see the nature of retracement, because this happened today morning, and it was a 15-minute candle, I believe, that really gave us that momentum. As you can see, it gave us that very high momentum, right? Now looking at the lower time, at the sorry, looking at this same time from the 15, we do have this level here that could act as a price magnet or even an area where you can look for sell confirmations. So I'm going to just go ahead and box it up to act as an area of interest as well. But because gold is bullish, I wouldn't advise really coming in to look for sales on that particular zone. You just want to see how price is reacting. Is it giving you a break above to continue the buys, or is it possibly as signaling that it wants to sell from that zone to give us some kind of correction move throughout the day? So the idea would be to see uh, gold push above these highs and probably create new all-time highs as well, because the government still being shut down, and then how would I call that? What would I use best? The reinforcement of the U.S.-China trade wars, right? Gold is one of those safe havens that investors will tend to run to. So if that uh, trade deal becomes that crucial, because they only open the doors for a trade deal with China, but if they fail to come to that, we saw them now charging new taxes at the ports, which began today as well. But if they start going back and forth in the trade war, then you expect this pair to continue going. You can never know how far it's going to go. We don't control the markets, we're just retail traders. It's always good to be realistic and be reactive, not predictive to the market, right? You be reactive, not predictive, because even if you predict, you can't control the market. You have no idea. But when you're reacting, you're doing what the market is showing. So when you look at a contribution to the upside, we can have a retracement into this demand level here. Then price can continue through that, giving you probably a 3-minute confirmation. You can see price continue pushing from there. In terms of conditional bias, you could see price coming into this zone, the one you had boxed out here. Can probably give us some small retracement based on the pattern formed around here. And then you can have that breakout where you wait for a retest and a continuation to the upside. Besides that, a break below that would mean price has this next as a demand level. And because of the value of gold, these are always very good pips for you to look out for some opportunities. This is already about, I think, 118 pips just within that small move. So this small sell on this gold, because it's not a small sell, these were almost 800 pips, so 700 and something, the actual 850 and 96 pips. This happened in just, I think, 230-minute candles. Yeah, 230-minute candles, and it could in all those pips banked. But other than that, the idea would be to look for continuations, as we had said. Price comes into here, you look for ways, price going to continue pushing the trend to the upside. And there is zones we came out with deliberately that price could possibly come into one of them or either of them and give us some form of bullish confirmations to, of course, ride the gold wave to the moon as well. So this as far as our gold is concerned. So I expect those retracements, those pushbacks. We do have a second, remember this one was not already in question, it already been utilized. We do have a second demand level or our extreme demand level that you could still want to look out for, which is this over here. So what happens with these levels here is that sometimes a gold may give us that pushback down with high momentum. When it comes in that way, you can expect price to violate this, as I told you earlier. When the momentum is high towards an area of interest, the pair has a tendency of violating that area because, of course, won't give you a confirmation. It's the beauty with confirmations. So even if you're trading things like uh, even if you're trading things like gold that are so volatile, and price comes to us when you're trading, let's say, order blocks, and you've not been using confirmations, and you're done a confirmation, knowing that even a order block that would fail, you're able to stay out of it. Because one of the reasons order blocks would fail is basically because they're marked either in the wrong zones or price just went through them. And that happens a lot, right? That happens a lot. You can see all of these. But based on our momentum, you can see here, neither of them probably gave you a confirmation to buy within those areas. So that's why I always advocate for confirmations within these demand and supply zones, because that adds an extra edge towards the market that you're looking to look for opportunities or trade as well. All right, so moving on a bit, let's look at US oil. Once again, in case you have any questions, we shall look at them in the last segment of the session. So feel free to drop them in the comment section and show us what you can be able to do with them. So here you can see US oil finally went back all the way below all the way below went back all the way below the 60 level, which is what Trump wanted all along as well. It's what he always wanted all along. So here what you can see that price has been pushing to the downside with that of momentum. We did see a breakout from here, a retracement to this level. Price came back a little bit into this, failed to close below it, then continued giving us a correction to the upside to go to the extreme demand zones that I believe were in a lower time frame. We can just look at that shortly. So as you can see, price did come into the extreme supply zones, which were these over here, and then it was able to now give us at the origin of that push to the downside a nice taps ins, the nice sniper entries. And now looking at where price currently is, it started pushing down, gave us a breakout of this low, a breakout of this low as well. And now we are seeing a nice candlestick closure coming in to form right around this area here. So nice candlestick closure below this would mean price going to continue bearish or to the downside, and all you want to do is to look for areas that could possibly support that kind of bearishness. So preferably as well to be a nice candlestick closure below, push back slightly into the area of interest, and then later on push lower. That's if the price is probably pushing, or the desire for price is actually continuing to push lower. But that's the idea we're having on this. And you can see momentum is so high, so you need structures to be formed that you can use. Some people will tend to want to refine this and look 5-minute structures. I highly advise that, but of course, in a good day, they are going to give you the breakout retracement, push lower, supply level. So that can also be something you look out for, just in case. Look for its lower time frames to continue that momentum. So the momentum continuation happens on the lower time frames. When it comes just to continuing, you can use the lower time frames, but the general structure is something you want to have on a bigger picture or the bias at the end of the day. It's something you want to look out for on a bigger picture as well. So that is a US oil. Looking at that, we can look at silver as well. As I said, we have been tracking silver for quite some time this year. Almost ever since May, we do tend to speak about silver, and oftentimes because of the price action usually is better than gold, especially in times like this. We tend to see better price action than on gold when it comes to silver. So with silver coming to the 4-hour time frame, usually when you go to the very high time frames, you won't really see any significant structures, just price pushing to the upside. That's why I'm using the 4-hour lot. When you come and look for our most recent breakout, we did have a nice breakout around this, and then you have this demand zone that was responsible for the breakout. So when we refine this, you're able to see that a bit much more clearly, and we're able to refine it as well as it's able to refine this demand zone to that. Then it's low. So price gave us 2 re-entries on that area there, and it's trying to push to the upside as well. But of course, the momentum here is so much to the downside, and sometimes it's not very advisable to really fight the momentum. But we are focusing on the trend is bullish, but the momentum is coming in bearishly. As you can see, here this zone here, or supply zone that it's using to actually push price lower, so you can see it from here much more easily when we refine the time frames. We're able to see that. So for that whole price, we would want to see price come and close below this area here. The sentiment is largely bullish still on silver, but silver is one of those volatile pairs that can do a lot of things for no reason within the same day's price action, right? We are used to gold doing a lot of things like that. For example, today's sell on a 15-minute candle. I wouldn't say it wasn't necessary, but just so random, right? So silver has a tendency of doing that. So you can see it also did that today. These random moves there. So our closure below this, you can look for a nice push from in between around this to this level here, which are 100 pips, which is quite good enough for intraday trading. Quite good enough as well, right? So you can be able to capitalize on that as well. Because a break above that, you will see price coming in to fill some imbalances here or to pick up some liquidities. around certain zones like that. There are zones where you can look for price to come to and try to give you some kind of um, let's just mark this out, some kind of bearish activity. But a good closure above this high would mean that silver is continuing to the upside, probably targeting all the way to 55, 55 dollars on its price as well. So that's something you can look out for as well on silver. So last but not least, before you get into your questions and your queries, let's look at BTC USD. As I mentioned earlier, we did have a liquidation on BTC. Some people call it a liquidation, some people call it a panic sell. So what happens usually, some investors may have a situation that may probably force them to want to get out of a certain currency pair. And with Bitcoin, for them to get out of it, you have to sell your Bitcoin and you of course take somebody's dollars in simple terms. So what happens with the liquidation? Usually it's either a very large withdrawal and sometimes it's just a large selling orders being put in the market, right? And we had that flash crash that occurred, and you can see how bad it was. We have that those big pushes to the downside right into these lower time frame zones. So that was a 15% loss in one day on one commodity. That's quite very, very large. 15%. It's a very, very big change for a day's price action. So going down to the 4-hour time frame, we can see that bearish momentum on BTC is actually still there, but price did establish a certain strong lows right around this. We have those strong lows that are established right around there, and the area you want to watch out for here. Let's say the price respected the first time, it didn't quite get to it. Our price may probably want to look to come into this area here, or even the current zone that price is in. It's a nice demand level, as you can see. When you're considering just a break above here, the shift without this week, then this is a very good zone to actually look for buying opportunities. But then I can look at the nature of the retracement. The volatility is so high. So that's when you always tend to want to hold back a bit and look for extra confirmations. Now, what I'm seeing on the lower time frame, which is a 30-minute time frame in this case, is that price did create a high right before getting into the zone. Created this high, failed to take it out. So what you'd want to see is probably a structure form, a break above that high, then a new higher low, then a higher high, right? Then you'll have this area formed to be your area of interest. You can have that area to be your area of interest as well in terms of a Bitcoin, then to push price higher than that. That's just in regards to the most recent price action. Anything below that, of course, that means price will be looking to fill up the all of this imbalance, or even coming to the extreme, demand level, which is this, and then waiting to see if price can offer you some kinds of confirmations. So that's something you can always be able to look into in regards to BTC USD. So in the next few about 10 to 15 minutes, I'm going to just go through your questions and see which ones you can be able to get out of the way, or how best you can be able to assist with those queries as well. Yeah, bro, why is gold so high this week? So gold has been high for many reasons, but the main driver behind is one, the government shutdown, then to the fact that the US-China trade tensions are back in the scope or in the picture. So investors tend to look to deleverage, right? Or to look for a safer haven, right? Which is one of them is gold, of course. So they get their money out of the currency bonds and they drop it down into gold. So of course, when they buy more gold, the price of gold continues. But for now, it's a US-China tension and the trade shutdown and the government shutdown that has now crossed into 14 days, or will be crossing into 14 days by 3 p.m. East African time today. So that's why gold appears to be so high this week. I prefer to use the term why gold is rallying and creating new all-time highs. Good morning, brother. Kindly do analysis for JPY USD, Euro USD, and ZAO USD. We have done all of that. We have gone through Euro USD, JPY USD, and ZAO USD. So you can always be able to rewatch this session. To still be on YouTube, and you can go through the analysis as well. That's Adjust Us. You can be able to rewatch and then go through that as well. Can ZAO USD make a new ATI today? I can't give you a guarantee. But I'll be looking for it to make a new all-time high. I'll be looking for it. According to analysis, yeah, the potential is there for it to make a new all-time high. According to analysis, I won't lie, my analysis is bullish, and definitely my next stop will be for 200, because I tend to like using some of those rounded figures as my targets. So yeah, for 200 it's a possibility. So that guarantees a possibility. Gold can make that, but of course, as you've seen, it did have this sell to the downside to have to close above this high. To now pushed for 200. Shall need to have a closure above this high of around 4179.51. Yeah, probably if you get a candlestick closure above that, yeah, then I will be very, very positive. We are going for 200. Kindly do analysis for BTC USD. It's what we have looked at just right now in on the previous like 2 minutes. We just did go through BTC USD, and so the analysis we are looking at. Analysis on AUD USD. So let's see AUD USD. So also with AUD USD, you can be able to just compare analysis as well with Euro USD, GBP USD, and then the dollar index, because they are all directly correlated. So as you can see even here as well, price is given as a candlestick closure, just like we saw in GBP USD, and the momentum is to the downside. So what you want to focus on right now is to first see how you can be one with the momentum, probably continue the momentum to the downside, or if price is to retrace, what possible levels could it be able to respect. So the levels I'm watching out for right now, on if it was odd USD, there would be this level here. It's about 0.64832. These are areas whereby when price gets to them, I want to look for low time frame confirmations. You don't want to be trading blind. I don't advise that. When you look at the current price action, it's coming off a supply level, and this is supply level that's coming off of. And for it to hold, we want to see a 5 minute, give us some conditions, which definitely going to be closing below this low here, as it's doing, as you can see, a closure below this low, probably a nice small retracement into these zones, and then push lower. So this is an analysis you can look for on GBP USD. They're having this almost the same 4-hour structure that you can see, just that with GU, we hadn't quite closed below that low, or the 4-hour low. We hadn't quite closed below this low. You see that? But on odd USD, we have actually been able to close below that 4-hour low as well. So the idea is bearish. You play with the momentum. You want to be in the same direction with the momentum usually, and not to be in the wrong side of the charts or the markets. So that's a Cento odd USD. That's how we are looking like, or that's my perspective on it. The other thing you'd probably watch out for would be a closure below this low, a nice retracement, because your price will leave you that bearish supply level. That will be a new supply level over there. So a closure below this can mean a retracement back into those zones and a push lower. Yeah, so that's your analysis, Cento on odd USD. So okay, let's get the next question here. What's your take on USD JPY? That should be bullish. Let me just look for USD JPY. Here it is. So this is the weekly. We can look at the daily. So we did see a breakout to the upside as well, just like on JPY. Then a slight retracement coming in on Friday, then Monday, then today we are seeing price coming in some bit of bullish momentum. But you're seeing the dollar is gaining in a lot on the JPY. We did see JPY trying to give us some strength today. So to get bulls, the conditional bias will be this. This is a bearish area of interest. Why you'd want to consider it? Because price has possibilities of coming all the way back to the demand level here. This is a demand level, and as I said, usually when price has gap ups, sometimes it tends to fill them. Okay, oftentimes, but sometimes it won't fill them, right? Sometimes it won't fill them. For trade gold, you probably know that sometimes gold, the pair of gold will leave that gaps and never come to them, even for a year plus. I think we have a gap from 2023 and a 4-hour on gold. Update has never been filled. So you can have this area as a bearish area of interest. I wouldn't advise looking in for bears a lot. But then to be bullish on this, you'd want to focus on a break above that area. Nice retracement back into the zone. Then consequently a push all the way to the upside to take out these highs. Alternatively, we can see price probably come into this. Give us some bearish confirmations, come into this demand level here. I feel it right below the breakout you're seeing on the far left hand side. See that it's right below that. So it could be the order block responsible for this breakout as well. And of course, that area will still have to give you a confirmation. It will have to give you a nice confirmation for you to push that to the upside. Please explain the following: equity, balance, margin, free margin, and level. So equity, balance, margin, free margin, and level. Okay, let's start with equity. Equity is basically the money you have, or how much you're funded, or the equity you have, right? But when you get into a trade, I don't know if I'm able to show this on my screen. If it will be able to show. Okay, so I don't be able to show. Let's say, so equity is usually the total money amount of money you have, right, including profits and losses on your account. So that means when you fund your money, that's total balance. Then when you place a trade, you have equity and balance. Now balance will be the actual money you had on your account. Then equity will be the money you have, including your profit or your losses. So when you see equity, it will be including, if you're in a trade and you're in profits, to add your profits to the balance. That will be the equity. If you're in a trade and you're in a loss, it will be your balance minus the loss. That will be equity. So it's the money you have, including profits and losses, that are running on the account. That's with equity. Now, balance is basically how much money you have left on your account. When you place a trade and it goes in loss or profits, they will show you the actual balance you had without the profits or losses. I don't know if you get the idea. But that's the idea. Balance is just the money you have or that you started with trading that day there before you've closed a profit or a loss. So even if you have profit losses or you have you have money in profits or losses, they will still show you the money you had before you placed your trade. Then now the equity will be different because the equity will include either the profits or the losses that you have running then. So when you close your profits, they now go and they'll reflect on your balance. When you close your profits, they will close and then your balance will change. So your balance changes after you close your profits or your losses, and your equity will always keep changing based on how much profits you actually have running or how much losses you have running in the market at the moment. So I don't know if that makes sense. Then margin. So margin, I can give you like a figurative example. If you're given like, let's say how much money? $1,000, right? And you're going to buy some commodities. Let's call them commodities Y in the market, right? And every commodity Y costs, let's say, $150. So when you go to the market with your $1,000, you have 100% of your margin. You have all your money. You haven't bought anything yet, right? That means you have, let's say, all your money. Your margin is still full. So when I pick $150 and buy the first Y or the first commodity Y, I've used 150 of my full margin. My full margin was my total balance. That was my full margin. But when I picked out 150,000 to buy this commodity, that's the margin I've used. That's part of my margin I've used to buy this commodity. Then now free margin will be how much I have left. So when I get my $1,000, buy commodity Y and use $150 as the margin. It's the margin I've used. That's margin. Then what I have left on my account, I'm left with $850. That's the free margin. And why it's free margin is because now I can pick from this 850 and then go and buy more of commodity Y. I don't know if you get the idea. That's margin of, and that's free margin and margin in simple terms. As far as level, I'm not quite familiar with level. I don't know. You mean the level that they give you when you are in trades and in profits or losses? So how do you develop a strategy? So developing a strategy, usually there are very many ways you can develop one. One, you can learn a concept, a specific concept, then you develop a strategy. For example, someone may learn smart money and you learn, let's say, order blocks, imbalances, you learn things like directional bias. Then now you build them together and be like, okay, based on the knowledge I've learned on order blocks, imbalances, change of characters, and all these components of the concept, I'm going to be looking for one, directional bias. I'm going to be looking for two, an order block in these scenarios, in these situations. Then I'll be taking my trade based off of this. That's how you can do. That's one way you can do it. How I advise for do it is one, pick up a concept that can help you determine directional bias. Don't be very predictive with the market. You can have a general bias. A bias is not like you're predicting the market as an expectation. Oh, based on what I'm seeing, the market is most likely bullish today, right? If it's bullish, I'm going to look for buying opportunities. So get a concept that accounts for market direction or directional bias, right? a concept that can be able to show you the direction of the market within that day or within the week. Then two, get areas of interest that you'll be using. If your buyers told you bullish, get areas of interest that you feel you're comfortable trading, and they'll be helping support your bullish bias. Now that's part two of it. Then part three, get a confirmation. It could be a confirmation pattern. It could be even how to use an indicator to make a confirmation. Get a confirmation, a concept that gives you a confirmation. So in simple terms, your strategy should have directional or a concept that caters for direction. Two, a concept that gives you areas of interest or situations in which the market can achieve the direction or the desired direction. And three, a confirmation. So if you have those three things accounted for, then you can develop a strategy. So I believe that's my simple mechanism. Or someone says, also in regards to level, I think you mean margin level, right? So margin level is just in percentages. It's just the percentages of how much margin you've used and how much free margin you have left. But it changes with running profits. For example, if I have $850, if I have $1,000, then I risk, let's say, $50 on a what? On a trade, right? 50 is what percentage? It's 5% of 1,000, right? Then I go $50 in profits. Remember, my margin was $1,000, but I've placed a trade and I've gone 5% in profits, right? So they will add that percentage to my profits. When my account balance is $1,000, I have 100% margin. When I place a trade, initially the broker will first deduct my margin level percentage. And what they will do is that if I place a trade and I've risked, and that commodity or the lot size I've used is worth, let's say, $150, just place a trade, or the margin required to place a trade was 150, they are going to deduct my margin by 15%, let's say, by 15%. But when I go into profits, running profits, that reflects on my margin level, because now I have, let's say, 1,050 as equity. I don't know if the idea comes out, but that's the idea of margin level, a percentage, the margin level. So that's the percentage. When you're in losses, the margin level reduces. When you're in profits, that percentage increases. But usually you can just track on the margin and the free margin. It's easier to track that way there. So I hope I've answered your queries and your questions in regards to that. Other than that, I think we can call it a day, see how these markets play out today. And then probably yeah, we'll meet on the next session. Don't forget to sign up for the different FXPesa classes. If you're in Uganda, Kampala, we have free fiscal classes here at the Academy, Rumi Building, Lumumba Avenue, on the 7th floor, 3 p.m. to 5 p.m. And if you're in Tanzania, we have them at Dar es Salaam FNB House, 3rd floor as well. And don't forget to check out the Q4 market outlook, what to expect and what the markets are looking like going into the 4th quarter of the year. So you can check the link in the description and check out the FXPesa 4th quarter market outlook. Trust me, it will come in handy when you're navigating the market. So until next time, I wish you guys a blessed and a peaceful week as well.